Well, hello, my name is Robert Morris, and you've probably never heard of me, and I don't doubt it because history treated me like crap. Whatever. I was one of the most important people in the founding fathers. I don't know if you know this or not, but I am the only founding father that signed all three of the most important documents. That would be the Articles of Confederation, the Declaration of Independence, and the Constitution. No other founding father can say that. Now, unfortunately, my luck ran out in the later ends of my life, and I wasn't respected as I should have got a lot more respect, but I got none. Now, I had extreme knowledge of the public sector and finances and public credit. And so, Professor Mock, he's probably going to ask you to take a look at what I've done, and I'm hoping that you guys finally show me some respect. At least show Professor Mock some respect. Stock Market Mock is the stock market jabber.com. Check him out. Yeah, that's the way to go. Fuck, that was stupid.
All right, everybody. Let's thank Mr. Morris for being here with us tonight. He had a long journey. Back in his day, they used to have to take horses and stagecoaches, but I suppose that now he's either a ghost or in heaven. It probably is faster to get here. But regardless, I think it's good that he came because he's one of these people in history that was really important that has been forgotten. And it's really a shame. He's pretty much in a lot of ways just as important as the founding fathers were. But he got caught up in a land panic in the 1890 or sorry the 1790s, and he lost his money and he ended up becoming poor and going to debtor's prison. But he basically funded the Revolutionary War. They say that he paid for 80% of the bullets that were used, and not too many people really know who he was. So I'm glad that he was with us tonight, or is with us tonight. So let's talk about market principles. Some price levels are more important than others, and the market speaks a language to us. And the language is how it acts when it gets to certain price levels. If it gets to support or resistance, they tend to either reverse or break through or down. When a market gets to an important price level, it generally doesn't hang out there for too long. It's like a fork in the road. It's going to go one way or the other. And sometimes these levels, their importance can remain intact for a long time, longer than you think. This is what we call market memory. So believe it or not, levels that were resistance can become support, and levels that were support can become resistance. And this is due to market psychology. When you look at a chart, you got to understand you're looking at a graphical illustration of market psychology. Right? You're not looking at astrology or tea leaves. All right, so let's take a look at what's going on. Now, this is our technology sector, biggest sector in the market. I'm going to have to watch Apple this week because Apple is the biggest stock in this sector. And actually, if you just check out on the site, I just blasted something out on Apple, how it broke an important level today, but it might be ready for a rebound. Anyway, XLK is the technology sector. We look at these spider ETFs. The S&P 500 is made up of 11 sectors, and these ETFs, or exchange traded funds, are designed by S&P to follow them. So by charting the sectors, we can get an idea of what's going to go on in the broader market. It's like looking underneath the hood or behind the scenes or whatever your analogy may be. Healthcare is the second biggest sector of the market. It doesn't get the attention it deserves because it's healthcare. It's not, exciting like technology, but we can see here how resistance turns into support. Now, the reason why this would happen is seller's remorse. There are people who sold, and when the market went lower, they thought they did a great thing, and they were geniuses. But when the market goes higher, a lot of them say to themselves, man, that was stupid. I shouldn't have done that. I'm going to buy my shares back, but only if I can get them for the same price I sold them at. So they place their buy orders at the same level they sold at. So the fact that a resistance can convert into support is an illustration of market psychology. So we're not just looking here at tea leaves or whatever. I don't even know what your analogy is. Tea leaves, astrology. We're looking at it. If a chart is viewed properly, it's viewed through that context of what is it telling us about supply and demand. And frankly, most technical analysts really suck, and they're not worth paying attention to. And I'm talking about even some of the popular ones. All right, I gotta find this damn pen, man. Keep losing this stupid pen. All right, well, I've moved up into the financial sector by accident, but that's okay. It's because I can't find the damn pen. But here it is. I found it. All right, there's the pen. Now look at this. Resistance becomes support. This is seller's remorse. Investors sell. They regret doing so when the price moves higher. They tell themselves they're going to buy their shares back. And if there's enough of these buy orders placed at the former resistance level, it'll turn into support. And here we have buyer's remorse. People buy when the price goes lower. A lot of them regret buying, so they place their sell orders because they want to get out if they can and break even at a level that was support. So this is an example of how support can turn into resistance. It's another psychological thing. It's buyer's remorse illustrated on a chart. So it's market psychology illustrated on a chart. All right, so I'm going to bring out Mr. Morris, and he's going to tell us a little bit more about his life. And once again, sir, I thank you for being with us. All right, the stage is yours. Thank you.
Well, you all have probably seen this picture before, and I'm in the crowd somewhere. But I represented Pennsylvania in the Second Continental Congress from 1775 to 1778. My company worked with the Secret Committee of Trade in order to smuggle war supplies from France to the colonies, and I would bring them in through the Caribbean, slick by the British every time. I personally handled financing transactions on behalf of Congress because I had such a profound knowledge of the public welfare state, or not the public welfare state at the time. That's what you guys have now. I'm talking about finances and public credit. Like purchasing war supplies and buying and exporting goods in order to finance its efforts. It was the true Bond, James Bond kind of stuff for real.
Yeah, I mean, dude, you lived a pretty sick life. I'm glad you had some friends that could bail you out there at the end. But it's a shame that our culture is so dumb and they don't remember people as important as you, and they're more concerned with the Kardashians and whatever, blah, blah, blah. All right, now stock market jobber Mark is starting to get angry, so he better move on. All right, so here we have another example of market memory. Notice how a resistance level can stay intact for a while. So this was around, I guess, 146. This is a consumer discretionary sector. Um, so we can see resistance stays intact for a while. Support stays intact for a while. But when the support breaks, we can get a big move lower. Now, why does that happen? Well, support is a large group of buyers or investors looking to pay at or close to the same price for shares. So at a support level, there is more demand than there is supply. So when a market goes down, I keep losing my pen, there's not enough demand to absorb supply. So the sellers or the supply have to be willing to offer lower prices. And this forces a downtrend. But when we get down to support, there's enough buyers to absorb it all. And now why do things rally off of support or sell off of resistance? Well, if you're a seller and we get to resistance, sometimes the sellers start to sense, oh, gee, there's other sellers around, so I better lower my price and have the lowest price in town, or else no one's going to come to me. The same thing, it's the opposite, but kind of the same thing on support levels. Buyers start to sense like, oh, gee, there's other buyers around. So if I don't if I'm not willing to pay a higher price, I'm not going to be able to buy any stock. So that's why things rally or sell off of these important levels. All right, I'm going to bring out Mr. Morris again one more time. He's going to tell us a little bit more about his life story. All right, sir. Thank you once again.
You see, I was not one of those politicians that ran testy when my own plans were not adopted. I thought that it was the duty of a good citizen to follow when he could not lead. So during the war, I generously gave my personal funds and properties to the new government to help sustain the war effort. I gave ships from my private navy to the new United States Navy. It has been said that I funded as much as 80% of all the bullets fired by the Continental Army during the war. I also financed nearly 75% of all levy expenses by the new government. So therefore, like Dr. Fauci was medicine, Robert Morris was the United States government for a little bit of time there. You'll see the rest in the end.
All right, here we're looking at the industrial sector, one of the 11 sectors that makes up the S&P. We're looking at the ETF, and I'm going to find my damn pen before we go farther. Now, this is pretty amazing. If you're like a stock market junkie like I am, or a market junkie, if you really stop and think about it, why is $100 such an important level? Well, it's important because it's psychological. People like to buy and sell at nice round levels. But if you think about it from a fundamental point of view, what is it that just happens to value this sector, which is worth billions, if not trillions of dollars, at the same price? Here is back here is here. A lot of investors, newer investors, and I can understand why they do it. They think that for every little move in the stock market, there's some ulterior fundamental motive, because that's what the media reports, and it's just not true. Most of the time, if a market makes a big move, it's because of psychology. I mean, why was the industrial sector worth 100 here, and then a month later it was worth 83? I mean, what changed? And then a month after that, it was back up to 100. Nothing other than investor psychology or investor perceptions. So you can't figure out the market with chess. It can't be done. You got to figure it out with poker, where you realize that there are people that have emotions on the other side of your trade, and emotional people, just like you, do illogical things. All right, here's our communication services ETF. This is the home of Google and Facebook. We can see here market memory 52 level was resistance, 49 was support, resistance becomes support. Now support will probably become resistance. If you have a stock in this sector and you're wondering where to sell it, well, keep an eye on XLC. If it gets to 49, it's probably a good chance the market's going to roll over, at least stall out. So that would be a good place to have a target. All right, come back on, Mr. Morris, and thanks once again for being with us. So, what's it like on the other side there, dude? Can you maybe send me the lotto numbers? All right, whatever, man. That's a stupid joke. All right, let me move on. This is the consumer staple sector. It's looks like it's heading lower. Watch this support level. If this breaks, we could get a good move lower. This sector is like Coca-Cola, which is kind of stupid, frankly. I don't understand why soda would be considered a consumer staple. But the biggest company in the sector is Procter & Gamble. So take a look at what I just put on stock market jobber sector analysis, and you'll see some of the things I'm looking at for potential ideas on the short side, meaning buying puts.
I served as the Superintendent of Finance for the United States from 1781 to 1784. During my tenure, the first bank charter of the United States, the Bank of North America, was founded in 1782. The bank established with a loan from France that I was able to secure the year before. That is how strong Robert Morris was, is, and will always be. That is why I'm especially exceptional in history and should have not been relegated. I was then elected to the Continental Convention of 1787, and I served as a U.S. Senator from Pennsylvania from 1789 to 1785. No, shit, 95. I'm losing my time here. I'm getting old.
This chart teaches a lot right here. Resistance becomes support. Support becomes resistance. Seller's remorse. People sell, goes higher. They regret selling. They tell themselves, I'm going to buy it back if I can get it for the same price, and they place their buy orders at the same level they sold. Support becomes resistance. Buyer's remorse. People buy. Market goes lower. They regret buying. They tell themselves if they can get out of break even, they're going to. So it's a perfect example here. And when I was in business school 20 years ago, we learned about random walk. You can't outtime the market, blah, blah, blah. Well, guess what? The market does not follow random walks. If it did, support and resistance levels wouldn't exist. And yes, you can outtime the market. I know plenty of people that have gotten pretty extremely darn wealthy off out timing the market. And what's the secret? Well, the secret is understanding the important things, right? Trends, levels, momentum, and psychology. It's not about coming up with a secret system. All right, I'm going to bring out Mr. Morris one more time before we wrap things up. All right, Mr. Morris, let's hear what you have to say. Looking forward to it.
So, after the war, I became an aggressive land speculator during the 1780s, and even though I was quite the genius, I did a very bad job. My investments left me overexposed, leveraged in your terms nowadays, when conflicts in Europe sent financial ripples through the Americas. When the Panic of 1797 struck, I owned more land than any other American, but I had no flippin' cash left. So eventually I was arrested and I was sent to debtors' prison from 1798 to 1801. Fortunately, some of my friends bailed me out and I got released. I spent the rest of my life in a humble retirement home, and I begged for them to just give me a shot of morphine, but they would never do it for me, and I was so pissed. I haven't received the credit, and I respect that I deserve. So that is why my friend, Professor Mark, has given me this week's feature on StockMarketJobber.com.
Wow, that's pretty impressive, dude. Pretty impressive. It's a shame you don't get more Creed or Street credit. Anyway, I'm just going to wrap things up here. So here's our utility sector. Once again, we can see support becomes resistance, resistance becomes support. You can see it almost on any chart. Even up here, support becomes resistance. If you know where these important levels are, it's like your roadmap to profit. If you don't know where the important levels are, it's basically like you're in a town you've never been in before and you don't have a map or a GPS. So you're not going to know where you're going. But if you know where the levels are, it's going to help you drive around town and get you to where you want to be. Here's our basic material sector. These are our quote unquote boring companies, although I can tell you if you're making money, they're not boring. But once again, we see support becomes resistance, resistance becomes support. It's such an important principle of markets, and so few traders understand it. Is just knowing where these levels are. I don't know why 81 is the level and not 83 or 78, but I don't need to know. I just listen to what the chart tells me. We let the market tell us what to do. All right, and then the last sector we're going to look at here is the real estate sector. And once again, I can't find the damn. Oh, wait, here it is. Okay. Here's my pen. Oh.
As I leave you, your extensive time that you've spent with Robert Morris, I just want to introduce these $10 silver note certificates. They were called blackbacks. And if you ever find one, there's collectors that will pay a lot of money for them. Just make sure that you remember Robert Morris gave you the tip when you find one, eh? Thank you very much. Have a great day. StockMarketJobber.com.
Maybe. All right, I'm going to try to back up here. Looks like I'm still recording. All right, I'm sorry. Well, maybe not. I'm sorry, Mr. Morris, but the last thing we were going to look at is a banknote that you were on. Actually, it wasn't a banknote, it was a bank certificate. Uh, and you can see it if you download the presentation. But back in those days, you would actually have a certificate you could bring to the bank and get actual gold. If you look at your money now, it's on a note, which is basically just a promise. And we have $31 trillion in debt, so who knows how long that's going to last for. All right, everybody, thank you so much, and I will see you soon at the stockmarketjobber.com.